Did you know the Federal Reserve just made a bold move that might quietly shake your wallet without you even realizing it? Jerome Powell, the chair of the U.S. Federal Reserve, just gave a major speech that impacts every American's job, mortgage, car loan, and grocery bill. And no, this isn't one of those vague economic updates. It's a direct response to growing pressure from politicians, market volatility, and rising costs across the country. Powell stated clearly that interest rates will remain at 4.25 to 4.5% for now, and while the Fed has hinted at 2 possible rate cuts before the year ends, nothing is guaranteed. He emphasized that the fight against inflation is far from over, even if price increases have slowed from the sky-high levels we saw post-pandemic. The central message was clear: the Fed wants to see undeniable proof that inflation is truly heading toward 2% before it acts. What's stopping them? Well, one major issue Powell called out was the impact of tariffs. Yes, the kind the US places on imports from other countries. He acknowledged that recent trade policy changes, especially those proposed or supported by politicians like former President Donald Trump, are putting new upward pressure on prices. That means goods coming into the US are getting more expensive, which directly hits your local store's pricing and ultimately your budget. Powell didn't just stop at economic factors. He also indirectly pushed back against political attacks. Trump recently labeled him a numbskull and blamed him for not cutting interest rates fast enough. But Powell made it clear that the Fed doesn't respond to politics, it responds to data. In fact, this independence is crucial for the Fed to make decisions based on what's best for long-term economic health rather than short-term election cycle pressures. Despite the drama, Powell's calm and firm tone reassured markets that the Fed is focused, analytical, and cautious, not impulsive. Now, let's talk about what this all means for your everyday life. First off, borrowing costs are staying high. If you were planning to buy a home, refinance your mortgage, or take out a car loan, expect interest rates to remain elevated for now. Credit card debt? Still expensive. And while you may have seen prices easing at the pump or the grocery store in some areas, the Fed is signaling that inflation is still sticky in sectors like housing, healthcare, and insurance. On the job front, the US labor market is still relatively strong, but it's not booming. Powell highlighted that while unemployment remains historically low, job openings are down, wage growth is cooling, and employers are being more cautious with hiring. This indicates a slow shift, what economists call a soft landing, where the economy cools without crashing. The Fed wants to engineer this delicate balance, reduce inflation without pushing the country into a recession. And this is where it gets really interesting. There's increasing tension between market expectations and the Fed's projections. Some investors believe a rate cut could happen as soon as September, especially if job growth weakens further. But Powell isn't convinced yet. The Fed's official forecast shows inflation creeping slightly above 3% by year-end, and that gives them reason to hold tight. If inflation doesn't move closer to the 2% target, those cuts could be delayed well into 2026. That means consumers and businesses need to be prepared for a prolonged period of higher rates. So, what should you watch going forward? Powell urged Americans to pay attention to incoming inflation and labor market data. The Consumer Price Index, CPI, jobs reports, and retail sales numbers over the next few months will be critical. If these indicators show progress, then yes, rate cuts could happen. But if inflation rebounds or remains flat, the Fed will likely hit pause. Powell's cautious tone reflects the lessons learned from the 1970s and 80s when premature rate cuts reignited inflation and led to years of economic pain. He doesn't want to repeat that history. One subtle but powerful line in his speech was about the importance of long-term credibility. If people believe the Fed will keep inflation in check, they behave accordingly. Employers manage wages, businesses price products carefully, and consumers make smarter financial decisions. Lose that trust, and inflation can spiral out of control even without massive spending or supply shocks. Powell wants to protect that credibility at all costs. But there's another layer to all this: the global stage. With elections on the horizon in multiple countries, trade wars heating up, and foreign central banks also trying to tame inflation, the Fed's actions aren't happening in a vacuum. Powell noted that international trade tensions, particularly rising tariffs on Chinese and Mexican goods, could further complicate inflation dynamics. More expensive imports mean American consumers pay more, and that could force the Fed to keep rates higher even if other parts of the economy are cooling. And then there's the stock market. Powell's speech caused some initial jitters on Wall Street, especially among tech and growth stocks that thrive in low-interest rate environments. But the markets rebounded after realizing Powell wasn't slamming the door on cuts, just saying not yet. Bond yields fluctuated as investors recalibrated their expectations for September and December. Even gold prices ticked up, a classic sign that some investors are preparing for a potentially more volatile environment. Let's also not ignore how this affects housing. The real estate market has cooled significantly, especially in once booming cities where prices skyrocketed during the pandemic. High mortgage rates have priced out many first-time buyers, and even sellers are reluctant to move because they'd have to take on higher rates for a new home. Powell's steady tone gave no comfort to those hoping for a sudden dip in borrowing costs. It's a slow grind, not a quick fix. Renters aren't safe either. As landlords face higher costs for maintenance, insurance, and financing, they're passing those expenses on to tenants. Powell acknowledged that shelter inflation is one of the most persistent problems right now, and it's unlikely to disappear anytime soon. So what can Americans actually do with all this information? First, if you're thinking of making a major financial decision, buying a car, home, or starting a business, understand that financing will remain expensive for a while. Shop around, compare rates, and consider waiting if you can. Second, pay down high-interest debt as quickly as possible. Credit card APRs are still above 20% in many cases, and they're not coming down until the Fed acts. Third, build a cash cushion. If the labor market weakens or inflation remains high, having emergency savings can be the difference between stress and stability. Powell's speech wasn't full of buzzwords or drama. It was calm, data-driven, and focused on delivering long-term stability. But the message between the lines was unmistakable. The Fed will not be bullied by politics, won't move hastily to please markets, and won't jeopardize its credibility for short-term applause. Instead, it's taking a cautious, strategic path forward. For Americans already feeling the squeeze from inflation and high rates, that may not sound comforting. But it does signal a clear direction. The Fed's North Star is price stability, and it won't rest until it gets there. So next time you hear about inflation numbers, job reports, or Powell's speeches, know that these aren't just headlines, they're signals about where your money, career, and future are heading. And if this breakdown helped you understand the bigger picture, then make sure to like this video, drop a comment with your thoughts or questions, share it with someone who needs clarity, and don't forget to subscribe so you never miss a plain English update on the forces shaping our economy and daily lives.